Welcome everyone to ABG Investor Days. My name is Henrik Hintze and I'm an equity research analyst here at ABG. With me now I have the CEO of Awardit, Erik Gråman. He will now present the company for us and after that I will ask some questions. Please Erik, go ahead.
Thank you. So, hi everyone, hope you're all well. Can tell from the people here at least you're suntanned, ready for summer, so good sign. So I'm here to talk about Awardit, and I'm the CEO of Awardit since March last year, when I took over after the founder, Niklas Lundqvist, who is still in the business, working with business development and M&A. And very briefly, Awardit was founded in 1999. It went public on the stock market in 2017, late 2017. And we are the leading provider and service provider of loyalty and gift card solutions in the Nordic region. And we also have an increased foothold now in the DACH region, so growing also outside of the Nordics. And we are managing and running on behalf of our clients more than 250 programs in the Nordics. And we also have a similar number of clients across the DACH region. Our headquarters are in Stockholm. We have offices in Gothenburg, in Copenhagen, in Hamburg, and in Wels in Austria. And today we employ around 250 people across these offices. And since our IPO in 2017, we have made 11 acquisitions, adding up to this portfolio of services and clients that we have today. And I will talk a bit more about that later on. And our two main business areas are loyalty solutions and gift card solutions. And up until 2017, Awardit grew organically. And after that, we have continued to grow organically, but also added acquisitions to the growth, of course. And our vision is to become the leader in Europe in our segment of business, which is loyalty solutions and gift card solutions. And we believe we are on a good way to achieve that. And our mission is to help customers improve their customer satisfaction, retention, and sales that goes across both loyalty solutions and gift card solutions. And we provide a proprietary software toolbox which enables our clients to service their clients with loyalty programs, solutions, and gift card solutions. And we see strong organic growth in the business, and we have a rising profitability as well. And if you look at our mix in the business, around 25% on the revenue side is from gift cards, and 75% of revenues come from loyalty solutions. And from a geographical perspective, we have around 70% of revenues coming in the Nordics and 30% and growing in the DACH region and outside of the Nordics. And as I mentioned, we have our two main business areas, which is loyalty solutions and gift card solutions. And within these two, we have a multiple number of services and platforms that we offer. On loyalty solutions, we primarily divide it into B2B loyalty programs or clubs. And here we have an end user that is a business owner. And we also have, on the other side, B2C clubs or loyalty solutions. And there we have end consumers that are using these programs. And there we have clients such as SAS, Scandic, and E.ON. On the B2B side, we have clients such as Ahlsell, Würth, and Bayer. We also run motivation programs and loyalty programs for employees. And we work with a lot of clients on these kind of programs as well, enabled by the same kind of platforms for loyalty solutions that we provide to B2B and B2C programs. On the gift card side, we also have a multiple range of different kind of products. We enable and distribute international brands such as McDonald's, Spotify, and Netflix in the Nordic market. We work with Nordic brands such as Ving, Synsam, and Stadium. We have experience products such as hotels.com, where you can buy gift cards to redeem for stays through hotels.com. We have private labels within that segment, such as Supergift and Hotel Box, which is our own labeled gift cards, where you can buy a gift card to redeem for an experience, a hotel stay, or similar. We also have a MasterCard program called Paygo in our portfolio, where we own the full program and distribute that through Nordics as well. We work with mobile top-ups and ticketing with clients such as Comvik, Free, and Filmstaden. And we also work with processing services, enabling clients to process their gift cards, particularly in the Nordic region, but also throughout, starting out in Dach as well. And the timeline to put this portfolio together, as I mentioned, we went to the stock market in December 2017, and we have since made 11 acquisitions. In the early days, Awardit was a drop ship-based solution for running loyalty solutions. We then acquired Crossroads, which was more of a B2C provider with its own warehouse, creating a hybrid distribution model where we today have both dropship solutions and our own warehouse-based shipment to our clients. We have made 2 major acquisitions in the gift cards area, which is Retain24, which is the main processor of gift cards in the Nordics, and MBXP based in Copenhagen, which is the main retail distributor of gift cards in the Nordics. And our 2 latest acquisitions have been in the Dach region with Prämie Direkt in December 21, and the latest one in Austria, Connex, in February this year. And they complement each other on loyalty solutions in the same way as Awardit in the early days was complemented by the acquisition of Crossroads. So while Prämie Direkt had its own warehouse-based distribution system, Connex had dropship-based solutions, and we are now combining these 2 to create a full-scale solution in the market. And looking back through the years, up until 2017, we had organic growth, then we added on acquisitions to accelerate growth. You can see that we have added EBITDA per share along the way, pretty much every year, except for 2020, when we had a bit of a setback due to the pandemic. Some specific products, such as cinema tickets, took a hit in terms of volumes, and that affected our profitability as well. You can also see that our EBITDA margins levels and our gross margins have gone down as an effect of a dilution from the acquisitions that we have made. So Awardit came from a certain level of profitability and EBITDA margins, then adding on other businesses with other profiles has made the margin come down and being diluted. But what to do is that we work with all our businesses to strengthen margins over time, of course. And 2022 was the best year ever of Awardit. We delivered 862 million SEK in revenues and 111 million SEK in EBITDA. And if you look at the underlying business without the newest acquisitions, such as Inspiration Company, MBXP, and Prämie Direkt, that's really the driver of the growth in 2022. So the core business, which was the old business before the latest 3 acquisitions, had an organic growth of 23%. You can see that here in the yellow line to the right, or the yellow part to the right is the growth of the old business. And then we add the acquisitions on top, which is the blue part. And the acquisitions have been growing slower than the old sort of core business. And that's mainly due to Inspiration Company being an acquisition where we merged the organizations and merged the customers onto the Awardit database. And new customers are not coming into primarily Inspiration Company, but now onto the Awardit platform. So we see a lower growth on what was before TIC. inspiration company. MBXP was a turnaround case, which we turned profitable over 2 years. And Premier Direct has seen some challenging market conditions in Germany that has taken growth back a little bit. But and you can see that also through Q1 this year. But we believe we have a potential to continue to grow there, especially with the combination now of Connex. And if you look at Connex coming into the mix here as our latest acquisition in February this year, they add to the revenues of the group. If you look at the pro forma for last year, as if they were part of the group, they would have added 192 million SEK in revenues and 18.5 million in EBITDA. So including Connex, our pro forma revenues is 1,078 million SEK, so 1,078 million SEK for last year, and our EBITDA around 130 million SEK. And the acquisition of Connex was based on revenues estimated at around 15.6 million euro when we made the acquisition. After closing the books, they actually delivered more than that, so 17.8 million SEK. The estimated EBIT was 1.4 million SEK, and they delivered 1.7 million euro, which makes it an even better acquisition actually than we hoped for, and adding, of course, strength to the group. And adding now Connex to the group, we will see gross margins being strengthened on the total level of the group due to the fact that Connex has very high gross margins, especially in their gift cards and voucher business. On the other hand, we will also see personnel costs coming up because they have a higher share of revenues as personnel costs compared to the rest of the group. And that's mainly because they are building their own voucher programs. They are working with fulfillment and sales of these programs, which is costly and rather employee heavy compared to the business that we run in the Nordics. But also worth mentioning is that we had around 137 million SEK of cash and cash-like items being brought into Awardit from the acquisition of Connex as well. So also strengthening the cash position of Awardit through the acquisition. And looking at the first quarter of this year, it was our best first quarter ever. We had a 33% growth compared to last year's first quarter, which then was 222 million SEK. And from that, 29 million came from Connex, which is then for February and March only. And that's 33% growth, but organically, excluding Connex, it is still 15% growth on the rest of the business. Now we consider everything except Connex organic, because we have all the companies have been with us for more than a year, so they become organic to us after 1 year. But so all in all, the rest of the business, a growth of 15% organic for Q1. And some main drivers are a growth in Supergift, our own private label gift card. We had a growth of around 100% in face value sales compared to last year's Q1. We also had a strong growth in our B2B loyalty programs, driven by one of the clients that we merged onto the Awardit platform last year in Q1, coming in with lower comparables for last year than this year. And this will even out a bit now as we move into the year. And on an EBITDA level, if we adjust for our acquisition costs that we had for Connex, which was 4.4 million SEK, we had an EBITDA of 11.5 million SEK, which is 102% more than last year. And then the reported EBITDA, so also taking into consideration these acquisition costs, were 7.1 million SEK compared to 5.7 last year's Q1, so up 25%. And here you also had a contribution from Connex coming into the mix. Could also be worthwhile to mention that We are rather heavily affected by seasonality in the business, which means Q1 will always be our weakest quarter, both in revenues and primarily in profitability. And that's because the trading pattern in loyalty programs is much stronger end of the year, especially around the weekends, the Christmas holidays, etc. And especially also in gift cards, where you have high sales in parts of the programs end of the year, and then high redemptions affecting both revenues and profitability in Q1. So lower profitability in Q1, then usually we have a normalized Q2 and Q3, and the strongest quarter is always Q4. And in the quarter, we had a bit of an effect, of course, then from the seasonality patterns, but especially from MBXP, which has high redemptions of gift cards in Q1. And they had higher redemptions this year than last year. So that's affecting the profitability of the quarter. And we also report breakage, which is unredeemed values of our own private label cards. And in Q1, we had 1 million, roughly, in breakage from Supergift. And we have started to report a little bit more around loyalty as one business area and gift cards as the other, and we'll continue to do so. And we had growth in both business areas. In Q1, in loyalty, we had 25% growth, and the organic growth in loyalty was 17%, and the rest coming then from Connex. In gift cards, we had 63% growth, and that's because Connex is coming in strong here. We had an organic growth of 9%, and the rest of the growth is coming from Connex. And in both of these areas, we see strong development of the existing clients that we have on our platforms. And we also see a continued strong interest from new clients to join the platforms. And on both these, both these business areas, we have very strong synergies of scale through adding new clients to our platforms. We can pretty much of course, run the Q4 business the full year around. That's the capacity we have. And beyond that as well, of course, on our existing organization and the existing platforms and systems. So we can add easily clients and add profitabilities through synergies of scale. And this we also see through our gross margin that we can strengthen over time. In here, you see the Q1 is our weakest quarter, and that will, I mean, that has been strengthened through the acquisition of MBXP, and now MBXP becoming organic. Now we had a bit of a stronger gross margin in Q1, which was 32% compared to 28% last year. But that's also because of Connex coming into the mix with a very high gross margin. And they have a gross margin of around 70% in their gift card programs. And as I mentioned, at MBXP, on the other hand, we had lower gross margins due to higher redemptions, actually taking down a little bit the organic gross margin. And on the P&L side, I mean, we deliver not a very high operating result in Q1, as you can expect. We have a higher cost of commodities in our programs, driven primarily by higher turnover. Other external expenses are mostly affected by the addition of Connex, while comparable other external expenses actually go down in the quarter. And then we have personnel costs coming up through adding Connex to the mix. But we believe we have a strong foundation in terms of the margins in the programs that we run and the development that will enable, strong contributions in the coming quarters. And to summarize, I believe we are well positioned to continue our success. We continue to grow organically, which is the core, of course, for us to be able to deliver growth with our existing clients and add new clients to the platforms. We had 15% organic growth in Q1, and we see that continues into Q2 as well. Also, the acquisition of Connex provides a very strong position in DACH. We have a leading position now in terms of being able to provide clients with full-scale loyalty solutions in the DACH region. And it's a perfect fit with Prämie Direkt that we already had acquired, and also a potential now to grow, not only organically through these two, but also to add complementary acquisitions in the region as well. But we see a lot of potential to start cross-selling products and services between Connex and Prämie Direkt, working closely together, also in approaching the market with a combined portfolio of services moving forward. So very strong prospect for continued organic growth in DACH region. Also, we are working a lot with projects across the group to realize savings in procurement. Of course, having a larger footprint in DACH gives us the possibility to have better negotiations with suppliers, etc., in all different areas. We have cross-selling opportunities not only in DACH, but also across regions. And we're also working with different kind of tech projects where we can enable synergies across platforms. We have a potential to launch Supergift across markets, and we're launching Supergift in the German-speaking part of Europe now in Q2 through the Connex sales channels, in a similar way that we launched Supergift in the Nordics, creating a 100 million SEK product mainly through our own channels. We also see a continued flow of new customers and strong pipeline of new prospective customers. We have identified additional potential complementary acquisitions. Our focus is on the DACH region, but we also see potential in the Nordics and in the broader scope also across Europe. We have not only proposed but also agreed to reintroduce dividends payments that was put on hold in spring 2020, but now it's back again. And our vision is to become the leader in Europe, and we believe we are on the way there, really. All right, I think that was it.
Thank you for that.
Thank
Let's
you.
move on to some questions. So, speaking of your two segments, the gift card and loyalty segments, could you talk a bit more about how you view the potential of these two segments going forward? And also, maybe, do you have customers which purchase both of these services, or is it largely different customers?
It's largely different customers. We have, of course, talking about the development of the loyalty business area, of course, I could do that for some time. Also about the gift card business area. And I believe both have great potential to grow further. We see on the loyalty side, we see continued growth from existing customers that we had for a very long time. We continue to grow with those, even in more challenging times. Loyalty becomes even more important for our clients. They are very keen, of course, to keep their loyal customers within their business. So investments into loyalty and loyalty programs has not decreased, and the interest in loyalty programs has not decreased. We also see that we have a strong footprint in the Nordics, but we can add further customers in the Nordics as well. So I believe we have a good future in the Nordics for loyalty programs. And in DACH, as I mentioned, we have a combination now that really enables future growth and enables selling a full-scale solution to the market that we have not been able to do before in the DACH region. So strong, I think, a strong prospect for growing the loyalty segment. In gift cards, it's not growing in the same explosive way. We are covering a lot of the Nordic market, but we are adding, clients every quarter, every year to the platform. Every client that we can add is a profitable one, of course, adding scale to our network and the usability of our platform. We also see the potential to work with products such as Supergift and adding variants to that, expanding the portfolio of what we offer to the market. And that, I believe, is a strong prospect as well. We have some products now in the DACH region that we don't have in the Nordics, and the other way around, which can be strong future growth driver as well. And then there is a combination, of course, where we can offer distribution through our programs to gift card clients, which is a very strong proposition. We launched our Supergift gift card mainly through our own channels in loyalty programs, making it a successful product for us, really. And that's also how we launch other part of our gift card portfolio. We enable their business through their own business, retail online and offline, but also through other retailers, through MBXP across the Nordics, and also through our own channels. So of course it's a very strong combination as such.
All right, thank you very much for that, Erik.
Bit of a lengthy answer.
Yes, and I think that's all we have time for, actually. But thank you very much for presenting the company, and thank you all for listening.
Okay. Thank you very much. Thanks.